Hi, this is Andy Filipiuk in Toronto for the week of January the 9th. Last week on Friday, we saw a massive explosion of the upside in the stock markets in North America. The Dow, in fact, was up over 800 points. Now, this was a reaction to comments made by Chairman Powell, saying that he is not on automatic pilot when it comes to the Fed's balance sheet. So he, in effect, changed Fed policy to a certain extent where they're going to be more in touch with what's happening in the marketplace as opposed to being on automatic pilot, rolling off the balance sheet. Now, no matter what happens, this was great for the stock market in the short term, but not necessarily the longer term or for the economy. Higher interest rates have already filtered into the global economy. And in fact, we're seeing a slowdown just about everywhere globally, from real estate to manufacturing in Germany. We're seeing just very, very bad economic numbers, Apple and Samsung as well on the consumer side. So even if the Fed stops here, we've had the corporate leverage loan market and the corporate high yield bond market effectively seize up, meaning companies, if they want to borrow, are going to have to pay a much higher interest rate in a less liquid market. And as I've said in previous videos, there's a lot of corporate debt coming due as well as mortgages over the next 2 years that are going to be paying much higher interest rates than they were even a year or two ago. So if the Fed stops here, it's not necessarily a big deal, but what it does say is that, like Japan, it's highly likely that we will not see higher interest rates possibly for another decade, as the size of the debt acts as a tremendous anchor on economic growth. Thanks for watching.